We got earnings from the best auto company in the US today. No, that's not Tesla. That is General Motors. And as of Tuesday, stocks up about 15% after the company reported phenomenal results. They are growing quickly. Margins are a lot better than expected. They increased their guidance. So I'm going to dig through all the numbers that you need to know today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's just jump into the high level numbers. This is the highlights that management gave in a presentation. Number one in total US sales, up 8% year over year. So there is no sign that GM is losing market share, that EVs are taking over. That was the narrative a couple of years ago. Obviously, you had the EV tax credit that ended at the end of the third quarter. So that's going to impact EV sales going forward. We're not going to see that in these numbers. In fact, GM's numbers were pretty solid. Number two spot, 67,000 units sold, and they were growing pretty rapidly. Now, management did say that those sales are expected to drop pretty precipitously going forward, but they've been kind of pulling back that investment on electric vehicles and have been going more all in on ICE vehicles. They have been keeping incentives low. That's helped their margins, and inventory down 16% year over year to 527,000 units. Inventory is always one of those things you want to watch with an automaker, because if you build up too much inventory, then you got to discount vehicles to sell them. That takes away the pricing power that you have. So this is a really strong sign. They've also invested $2.1 billion in capital projects, paid down $1.3 billion worth of balance sheet debt, and bought back $1.5 billion worth of stock. So a lot of good things for shareholders. Now, if you're an investor in General Motors or you're looking at the auto market, look, these big trucks and SUVs, that's where the money is made. That's just the reality right now. And GM is the biggest name in full-size pickups. They have a 41% share. Full-size SUVs, they have a 60% share. So Tahoes, Suburbans, and all the other equivalent vehicles that they have just doing phenomenally well. And the Escalade is having its best year since 2007. They solidified a number two spot in electric vehicles. Now, again, this isn't going to be the growth area going forward, but Cadillac is really the brand that they're leaning on there. And the Equinox EV is the best-selling non-Tesla electric vehicle. One of the areas that I thought was most impressive in this call is the progress that they've made on software. So Super Cruise is going to be the biggest thing here. That is their hands-free driving assistance, basically similar to Tesla FSD. You need to be watching the road. You need to be paying attention. The car is not technically in charge. The car is not going to take liability if there's an accident, but it is now available on more and more roads. So there are now 500,000 active subscribers. This is still not available in every single vehicle. So that number is increasing year over year, on track for 600,000 and up 100% year over year. But they've already recognized $2 billion from Super Cruise revenue and have $5 billion at the end of Q3 in deferred revenue. That's basically revenue that they just have not earned yet. They will earn that over the next few years. So that's up 90% year over year. This is not going to be the future for General Motors, but it is going to be a nice add-on, a revenue if they are able to charge something for Super Cruise, if they're able to figure out ways to build business models and autonomous vehicles and things like that, kind of unlock features for a little bit more monthly fee. That could be another margin boost for them. And here's the big thing. In the last 2 quarters, there's been a lot of uncertainty about what the costs were going to be related to tariffs. So management had actually pulled back some of their expectations, their free cash flow guidance, things like that. A lot of that is coming back now. So they're now expecting $12 to $13 billion in EBIT adjusted. Previously, that was at $10 to $12.5 billion. Free cash flow from the auto business expected to be 10 to 11 billion. Previously, that was expected to be 7.5 to 10 billion. A bunch of adjustments being made there, not only directly to the tariffs, but also pulling some production back to the US. So saving on tariffs, a lot of moving parts there. And I'll get to some of the other impacts. One of them is actually price increases. That's actually flowing through the system. So that's helping with margins as well. Something that management did not expect coming into the year. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. I want to start with North America. GMNA is GM North America. Net revenue was actually down a little bit. So $40.6 billion in the quarter. Units were actually also down. So you may see that as a negative sign, but prices were up a little bit. I'll get to some of those in just a second. EBIT adjusted is also remaining very positive as inventories come down. So this is a real key. If you're going to have any sort of weakness in the economy, weakness in sales, you don't want to have a bunch of inventory sitting there. So it seems like they're doing a good job managing that. Down here in the bottom right, you see US EV sales. That is going up and to the right. But like I said, That's probably a little bit of a blip here. Expect this to go down to more like 20,000, 30,000 units per quarter. Now, some of the benefits that we're going to see are going to be in the fourth quarter. So Q3, not the best. GM North America was down from $4 billion to $2.5 billion. That was the real driver of things being down overall as a company. But you can see here is what drove that decrease. Volume was down a little bit. So that's going to be a little bit of a negative impact to a mix, meaning that people are buying more expensive vehicles. They're also paying a little bit higher prices. And then costs were actually a headwind of about $1 billion. So add all that together and you get to the $3.4 billion in EBIT adjusted. China was a headwind a couple of years ago. That's at least now providing a little bit of positive for the company. Net revenue up a little bit, wholesale down a little bit, and EBIT adjusted was at least positive. So again, you just don't want that to be negative for GM, but that's not a real driver of the business going forward. And then GM Financial also performed really well. So this is a subsidiary of GM. When you look at their balance sheet, a lot of the debt that sits on the balance sheet is actually associated to GM Financial, not GM, the auto business or the parent company. So they did have an increase in EBIT adjusted. Again, not expecting a lot from that business. But if they've got just a little bit of an improvement in performance, I don't mind that assets. The decline here in GM Financial as a percentage of US retail sales, actually, I think is a positive that's showing that retail sales are not dependent on financing from GM Financial. So that's a positive sign. And they also paid a $350 million dividend to GM in the quarter. So look, you add all of this up and the money that's being made in the auto business is being made in trucks and SUVs. And GM is the biggest name in trucks and SUVs. And still, this is an extremely cheap stock. Company's current market cap is about $64 billion. That's even after the jump in shares today. So if you look at that cash flow that they're expecting from the auto business, shares trading only for 5-6 times the cash flow coming from GM's business today. That is an extremely cheap price, especially for a company that's set up to survive and even thrive if we do have a little bit of a downturn over the next couple of quarters or next couple of years. So I love everything that we're seeing from GM today. We will get a report from Tesla later this week, but expect GM to really be the highlight because this is a company that's taking shares in internal combustion engine vehicles. And as we see, likely a decline in EV sales over not only the fourth quarter of this year, but also into 2026. That could mean even better news for GM. But let me know what you think about GM's results in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.